Hello guys, you are welcome once again to this channel. In today's session, I'm going to basically show you how to rightly calculate pips on gold. All right, how to calculate the pips on gold. You know, gold is one of the volatile pairs on the forex market. All right, and anyone who trades gold knows how volatile it is. When you say volatility, it has the movement in gold is very, very fast. So if you are not fast with execution, you would almost of the time miss a trade on gold, or you will make a mistake when you are trying to place a trade on gold. All right, and gold is one of the trickiest currency pairs on the forex market. People find it very hard to calculate its pips because it's very, very different from the other currency pairs like AUD USD, GBP USD, GBP JPY, USD JPY. And you know, in the next videos I will be doing a video to teach you how to calculate pips on all those pairs I mentioned. Pairs like GBP USD, Euro USD, AUD USD, all the pairs with USD as a code currency. All right, will be grouped together, and I'll teach you how to calculate the pips on that correctly. All right, then all the pips with GBP JPY as the code currency like USD JPY, Euro JPY, GBP JPY, or JPY. I would also drop a video on how to calculate the pips on that, because you know, when it comes to risk management, knowing how to calculate your loss, your take profit stop loss, is dependent on your understanding of pips, how the price moves, all right, in the market. So if you don't understand how to calculate pips and the different ways of calculating, depending on the currency pair or the pair you are trading or working on, you might make mistakes. You might make a lot of mistakes, right? So in this video, I want to basically take you through how to calculate the pips on gold. How to calculate pips on gold. But before then, we want to understand what pip means, because pip is an acronym, all right, for percentage in point. As you can see here, pip is an acronym for percentage in point. All right, it's an acronym for percentage in point, as you can see from this side. All right, it's an acronym for percentage in point. So when you hear pip is basically the short form of percentage in point, or price interest point. All right, and you know, as a forex trader, you calculate your profit or losses using pip. The movement in the price, all right, the up and downward movement in price, all right, or the changes in the price of a particular pair is what determines whether you are in profit or you are in loss. So when it comes to paper, it's very, very important. All right, so let's get into the training for today. And before that, please, if you've not subscribed to this channel, kindly subscribe. Hit the subscribe button. All right, hit the subscribe button. I want us to grow together as a family. So if you've not subscribed yet, please hit the subscribe button and let's keep this channel growing. The more I get more subscribers, the more I have the confidence or the motivation to upload more videos. Because on this channel, Trader X will basically explain to you how to trade the forex market in simple terms. No jargons, nothing. I'm just going straight to the point using baby English, all right? Even a 1-year-old baby can understand the things I'm teaching. So if you want to keep seeing videos like this, kindly subscribe to the channel, all right? And if you're a returning subscriber, thank you for being part of this family. But one more thing I want you to do, share this channel, all right, to other colleague traders, your friends, all right? Even if they are not forex traders, share these videos to them, share the link to them, all right? Then as they watch the video, the interest in forex will begin to come up, because forex, I believe, is one of the skills or the careers you need for the freedom it brings, all right? For the freedom it brings. And if you get to the point of profitability, all right, for the money it brings too. Are you getting that? So share this video. Anyone you claim to love, giving the person forex education is one of the best things we've done for the person. Are you getting that? So yeah, of course, share the video. All I'm trying to say is that share the video or share the link to other colleague traders and friends so that they can also learn a lot. So yeah, let's get into the video for today. Let me take you back to trading view to show you how gold looks like. All right, so yeah, as you can see, this is gold. This is gold, all right? This is gold, and as you can see, and there are different brokers and how they label this, but let me take you and show you. If you type XAUUSD, all right, as if you've been to SHS before, you know that XAU, when you look at the periodic table, that's the name for gold on the periodic table, XAU, all right? So this is gold, as you can see. XAUUSD is the acronym for gold on the market. Are you seeing that? So now, that's not the interest in this particular video. What I want to show you in this video is how to calculate the pips. So when you want to calculate the pips, our focus is the particular price, all right? The pricing. Look at the prices here. Look at the prices at this point. We have 4060.00. This particular point is what I'm showing you. See this particular point? You see 4060.00. Take note. And this is 4100.00. We have 4120.00. We have 4000.00. We have 3960.00. What am I trying to show you? If you look, there is a similarity between all the 5 I've circled here, and you can see that on the left hand side, this side, all right, there are 4 numbers, all right? So for example, let's take 4120.00. All right, so there are 4 numbers. Let me write it well. My handwriting is poor over here. You have 4. Well, I hope you can see 20.00. Then there's another one, 406 0.00. Are you seeing that? So what I'm trying to show is that on the left hand side here, after the dot, let's call it the right hand side. So in gold, how the prices are made, all right, we have 4 letters on the left hand side, then there are 2 numbers on the, did I say letters? Sorry, 4 numbers on the left hand side, as you can see, then 2 numbers after the decimal place, which we want to call the right hand side. Does it make sense? Yeah, so basically that. So we notice that gold on the left hand side has 4 numbers, all right, then we have 2 on the right hand side or after the dot. All right, this is very important to know, because when you look at other markets, like let me take you to this particular pair, let's say GBP USD, for example. Look at how the prices are made. All right, let me use this fixed one, 1.31100. This is what I'm showing you, this particular one, 1.31100. So what you are seeing is that with that, then most of the numbers come after the dot. All right, most of the numbers come after the dot. But for gold, 4 numbers come before 2 after the dot. You see, so it makes trading gold very different from all the other currency pair. Let me take you to another currency pair. So all the currencies with USD as the code currency, except gold, all right, will have 4 about 5 numbers at the back of the decimal. All right, but then you notice for gold, it has 2 numbers after the decimal point. All right, so let me take you to something like GBP JPY over here. You notice it also has a different way here, 205.500, 206.000. Right, so it has 3 numbers before the decimal point and 3 numbers after the decimal point. So notice all the currency pairs, all right, with USD as the quote currency. And I'll do a video about quote and base currency very soon. So just subscribe to this channel, you learn more. All the currency pairs with USD as the quote currency, all right, like GBP USD, AUD USD, they all have about 5 numbers after the decimal place. All right, then GBP JPY has 3 numbers after the decimal place. Same for Euro JPY, also has 3, right? So all the currencies with GBP JPY has 3 after the decimal point. But gold is a different pair altogether, which has what? It has 2 after the decimal place. Yeah. Okay, yeah, I have a trade running on this particular USD JPY. On the actual trade, I took my stop loss was somewhere around, so it almost hit my stop loss, but I'm moving up again. And my projection was, this is just a side teaching I'm giving you. My projection was that the price will come and retest here and move upside down to get my profit. All right, so that's my projection. I'm still in the profit, and I'm still in the trade anyway. All right, so let's just keep on and go to our lessons for today. So let's go to the note, and I'll show you a few things over there. All right, so yeah, we say that. Good. So what is a pipette? There is pip and there is pipette. All right, there is pip and there is pipette. Now I believe by now you have that knowledge I gave you, that on a go, let's say you have 4120.45. all right, now when you want to calculate the pip, what we focus on is not these ones. We don't focus on these, but rather the numbers after the decimal place. And when you are looking at Pippette, we are focusing on this particular last number. The second number after the decimal point is what we call Pippette. Are you seeing that? Then the first number after the decimal point is what we call a pip. So this is a Pippette and this is a pip. All right, yeah. But let's go through the note and see how it plays out over here. All right, so gold or XAUUSD generally is represented as 0.000. That means there are 4 numbers here, 0.0x, all right, because you are focused on Pippette. Pippette will be the second number after the decimal place, which in this case is represented by x. And a Pippette represents the fractional of a pip, or the fraction of a pip. It has a value of 1/10 or 0.1 of a pip. I will explain very soon. It is the second number after the dot, or it is the second decimal number. All right, I think we take the first one. There's a second number after the dot. All right, so right after this dot, this first number 0, not that, the second number, all right, which in this case is x, is what we call a pipette. All right, yeah, of course I'll explain this. So let's look at examples of a pipette. All right, pipette. So let's assume that the current price of gold is 189. The current price of gold is what? 189.50. So this is the current price of gold. If the price moves from the current price, which is 1890.50 to 189.51, because you are calculating Pippette, and I told you the Pippette will be, we focus on the changes in this number, the second number after the decimal place. All right, I hope you get that. All right, so if the price moves from this current price of 1890.50 to 1890.51, that's 0.01 rise. in price or value is 1 pipette. All right, so when you subtract this particular number from this, all right, if you have a trustee calculator, you can take that, subtract 1890.51 from 1890.50, you see that the answer will be 0.01. So that's 0.01 rise, all right, and you notice from 0 to 1 is an increase. So that 0.01 rise in price is what we call 1 pipette. So the changes was in the last number here, all right. So from 0 to 1, that 0.01 rise is 1 pipette. Now if the price moves from 1890.50 to 1890.52, now what's the changes? From 0.50 to 0.52. You see the difference is 0.02. So that 0.02 rise in price is 2 pipettes. Hope you are getting it. Are you getting it? Yeah. So if the price, the third example, if the price moves from 1890.50 so it moves from 0.50, which is the market price, to 0.53, that 0.03 rise will be what? 3 pipettes. Then if the price moves from 1890.50 to 0.56, what's the change? 0.06, which is how many pipettes? 6 pipettes, and so on. Do you get that? So for Pippette, and really when you are trading on the real chart, all right, Pippette is not really considered when you are setting your stop loss or trying to manage your risk. We focus mostly on pips because profit or loss is majorly calculated using pips, not Pippette. All right, but it's important to have this idea. So in case you want to teach someone, you let the person know. So let us work this together. In case the current market price, all right, is 1890.61, then the price rises from there to 1890.66. What can you say about that? The price was 1890.61, then it rose to 1890.66. So the changes you are seeing is the 1 and the 6 over here, all right? So what we can say is that 0.06 rise in price is 6 pipettes. Are using that? It's 6 pipette. Very, very, very simple. It's 6 pipette. So this is basically what a pipette means in this particular instance, all right? That's a pipette. Let's move on. Now let's move on to pip, which is the major reason for this particular tutorial session. A pip, known as the percentage in point or point of interest, is the unit of measurement to express the change in value between two currency pairs. All right, between two currency pairs, not really. I think I made a mistake with the note because I was trying to edit from an earlier note I made. Not between two currency pairs, right? To express the change in value, all right, in a currency. Are you getting it? So forget this. And forget this. It's just one currency, but the change in value from one price to another price, that change in value is what we call a pip. All right, it's what we call a pip. So disregard this and this. And anyway, you don't need a definition. You don't need a definition. All you need is how to calculate it. All right. So yeah, and then forex traders measure their profit or loss in terms of pips. Very true. That's why understanding pip calculation is very fundamental in forex trading. Those are the first things you need to learn when you are learning how to trade forex, the forex market is very important. All right, yeah. So let's move on and see how it is calculated. Over here, let me clear this. Okay, so the general pip is expressed for gold, right? So whilst Pippette was expressed as 0.01, all right, pip is expressed as 0.1 for gold. Are you getting that? All the other currency pairs have a different way of expressing their prices, but for gold, it is expressed as 0.1. That's the general rule. So in that case, that 0.1 becomes 1 pip of gold, all right? But let's assume that the current market price of gold is 1890.00. So that's the current market price. If the price moves from 189.00 to 1890.10, and I told you that pip is the first number right after the decimal place. So what do you see? This number after the decimal place has increased from 0 to 1. All right, so what's the difference? That 0.10 rise in value or price is what we call 1 pip. Are you using that? So this particular one, the one over here, all right, which is a rise from 0, is 1 pip. If the price moves from 189.00 to 189.0.20, the difference between the two prices, all right, is 0.20. So that 2, all right, that 0.2, all right, is 2 pips on gold. I hope it's making sense. If price moves from 189.0.00 to 189.0.30, now it's the same as the ones we've been doing. We have a rise by 3. So that 0.30 rise in value is 3 pips. Then if the price rises or moves from 189.0.00 to 189.0.40, so focus on this particular one. You see, that 0.40 rise in value is what? 4 pips. Simple as that. So when I'm going to calculate the number of pips, all right, or the change in price, what I'm going to focus on is the first number right after the decimal point. All right, first number right after the decimal point. Then I will know the number of pips I'm risking on the trade. Let's move on. Now, how many pipettes make 1 pip? How many pipettes make 1 pip? Now, 10 pipettes make 1 pip. All right, 10 pipettes make 1 pip. Let's go through it together. Let's go through this together. All right, so we had a current price of 1890.01. Now, the one here tells us it's 1 pipette. Please remember that. Then 1890.02 is what? 2 pipettes. 1890.03 is 3 pipettes. 1890.04, 4 pipettes. So let's jump. 1890.07 is what? Of course, 7 pipettes. 1890.09 is what? 9 pipettes. Now, as it gets to 9, and this is going to the next increase by 1, we'll move to 10, right? So you see, we now have 1890.10, all right, which now becomes 1 pip because the first number after the decimal point is 1. Have you seen that? So all the way from this point to this, all right, 1 to 10. That means 1 pip is the same as 10 pipettes, or 10 pipettes make 1 pip. Are you seeing that? If you go through the video again and rewatch so that you can understand. All right, so yeah, let's move on. I don't want the video to be a very long video. Now, how do we calculate pips on gold on the chart? Now, we know generally that a pip on gold is what? 0.1, which is 1 pip. Now, let's see, 1890.10 is what? 1 pip. 1890.20 is what? 2 pips. 1890.30 is 3 pips. 1890.40 is 4 pips. All right, now 1890.50 is what? 5 pips. And then 1890.60 is what? 6 pips. Very simple. Very, 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 very simple at this point. All right, so let's move on. Now let's see something here. A bit different. I want you to pay close attention. Now see, 1890.70, right? So 0.7 is what we are looking at, which is 7 pips. 1890.90 is what? 9 pips. Now see, as this is 90, all right, or 0.90, if you increase it by, all right, so let's see, 1891.00. What are you saying? Now we have it from here. So this is the current price. We always compare it to the current price. This was the current price. All right. 90. All right. Then we are now moving from 1890 to 1891.00. Are you seeing that? So there's a rise from this to this point, which is before the decimal place. All right. So I want you to focus from this point downwards. All right. So that 1.00 will now be what? 10 pips. So when it's 1 pip, it's 0.1. Right? Then when it's 1.0 is what? 10 pips. That means 2.0 will be what? 20 pips. You got it right. 5.0 will be what? 50 pips. You got it right. Right? Yeah. So let's go through. Now 1891.00 is 10 pips. This is very, very fundamental, but I'm teaching it in a simple way. So you think, this is what I've not known here. Of course. That's why you need to subscribe to this channel, because not everyone knows this particular thing I'm showing you. So take it serious. Then 1892.00. Now we focus on this. 92, right? Is what? 20 pips. Then 1893.00, 30 pips. 1894.00, so I'm focusing on this, 40 pips. All right. Then 1895.00 is what? 50 pips. Are you seeing that? Then 1896.50. Let me trick you small. 6.50 becomes what? 65 pips. So what you do is to just multiply that one by 10. All right. Multiply by 10. That's basically how we calculate it. Multiply by 10. This one, if you multiply 0.70 by 10, you get 7. All right, so 6.50 times 10 will give you 65 pips. Then 1897.80. So you just multiply 7.80 by 10 to get 78 pips. And I'll also give you another pour here. All right, so that's basically how we calculate this particular pips on gold. All right, let's move on to the next chapter. Now, how do we trade this particular pair of gold? So now we know that 0.1 is 1 pip. And 1.0 is 10 pips on gold. Basically, what we find is that 0.1 multiplied by 10, you get 1, so 1 pip. Then 1.0 multiplied by 10, you get 10 pips. Simple. So the general rule is that multiply the 0.1. You always begin from 1 pip, all right? Because that's how the price moves in pips, all right? The price moves in pips, all right? So multiply the 0.1 by the number of pips. Take note of this. Number of pips you are risking. And add or sell to the current price. depending on the entry bias of sell or buy. All right, so you take the 0.1, then you multiply by, let's say you want to raise 30 pips. All right, then the answer you have, which I believe is going to be 3. All right, add it or subtract to the current price, depending on whether you are buying or selling. So that means if you are going to buy, which means you expect the price to go up, right? And you are setting your stop loss, and this is the current market price. That particular result you had by multiplying 0.1 by the number of pips you are willing to raise. All right, you are going to subtract, because if you are going up, then stop loss will be set below. Are you getting that? So you are going to subtract that result from the current market price here. And when you are selling the market, that means you are going to add the result to the current price here, because stop loss, when you are selling a currency pair, all right, is set above the current market price. Very simple. So let me just walk you through a real-time example here, and I'll take you on the chart, to the chart, sorry, to show you how to do that on the chart. Now, stop loss and take profit setting, very easy. So when you are setting your stop loss, all right, if it's a buy entry, if you are looking for buy, you will subtract the result from the current price to get the stop loss. For example, let me show you. Let's say this is your support. Then the price comes here and you are looking to buy from this point. You know, stop loss is set below the current market price, this price, right? So what you do is that you subtract the result. What's that result you are talking about? The 0.1 times the number of pips you are willing to raise, let's say 30, all right? This result, you subtract it from the current market price to get the stop loss. Does it make sense? I hope it makes sense, right? Then if it's a sell entry, right, you would add the result. Now you know the result, right? Which is the 0.1 times the number of pips you are willing to risk. You add the result to the current price to get a stop loss. So assuming you want to sell, that means you have your resistance here. The price came here. You had a confirmation you want to go short, all right? This is the current market price. Let's assume, you know, the stop loss will be set above the current market price here. So what you do is that result, all right, you add to the current market price to get a stop loss. Simple, very simple, all right? Sure. Then let's go to the TP. So this is done. Let's go to the TP. If it's a buy entry, if you are looking to buy, how do you set the take profit? What you do is that if you are looking for a buy, that means you expect the price to do what? Rise, all right, up. So if you are entering from this point, that means you are going to add the result, all right, to the current price, because you want an increase, you are expecting an increase. So you are adding the result to the current market price to get a TP. Then if it's a sell entry, for instance, something like this, you want to sell from this point, all right, then you are going to, for TP, because for a sell trade, the TP is set below, all right, you are going to subtract the result from the current market price in order to get the TP. This is very, very basic in Forex. I'm intentionally teaching that so that we all be on the same page. So let's see an example. Let's say you want to buy gold, and the current market price is 1865.60. So take note of the current market price. And we want to set a take profit of 50 pips. So that means you want to get a profit of 50 pips and a stop loss of what? 30 pips. So now we know that our TP will be 50 pips, all right? Then we are risking, which is a stop loss, we are risking a total of 30 pips. Then if you want to set a TP, because we are going long, which is another way to say we are buying, all right? And I've shown you, if you are buying, all right, we are going to set our TP above the current market price, all right? So if you are going long, we will add the take profit to the current market price, all right, to get the TP. So what does it mean? What's the current market price? This is it. And what's the TP? 50 pips. So we have to calculate the 50 pips for gold and add to this price. So now 50 pips for gold will be calculated as 0.1, all right, times 50 pips equal to 5, which is what I worked here. Are you seeing that? Then that 5, all right, you add it to the current market price, so which is 1865.60 plus 5 to get a take profit of 1870.60. Therefore, the TP will be 1870.60. You see how easy it is? So that current market price where you are entering the trade, all right, you calculate the number of TP. Here can be 40 pips, which means to the 0.1 times 40. Then you add the 40 to the price, all right, then you get this particular level called the TP. Very, very, very simple. I hope it makes sense. Let's move on and see the other one. Then for a buy bias as well, if you want to set the stop loss, now you are buying at this point, all right, let's assume you are buying at this point. That means your stop loss will be below, all right, below the current market price here, all right. So what you are going to do, you said we had a stop loss of what? 30 pips. So I will just have to calculate my stop loss by saying 0.1 times my 30 pips, which will give me 3, all right? Then I will subtract the 3, all right, which is how much I'm risking, from the current market price of 1865.60 to get a stop loss of what? 1862.60, which means this is how it's going to be. All right, this is how it's going to be, because I'm risking how much? 30 pips. It's going to be this 3 subtracted from this particular current market price to get a stop loss of 1862.60. So far, I hope you are getting it. I can see you shaking your head. Yeah, well done. Let's move on. Let's look at the sell bias. Now, let's assume you want to sell gold, and the current market price is the same one we use, 1865.60, and you want to sell. We are maintaining the same take profit, the same stop loss, 30 pips. So that means our take profit is 0.1 times 50, right? Which will give us 5. Then this will give us 3, because 0.1 times 30 pips will give us 3. Now, if you want to set our TP, for a sell trade, all right, the TP is, let's say this is where you want to enter the trade. The TP is below the current market price. So how do we set our TP? We will basically subtract the 5, all right? Subtract the 5 from the current market price to get your TP. So it will be 50 pips by 0.1, which is the value for 1 pip, which will give us 5. All right, so we subtract the 5 from the current market price to get the TP of what? 1860, which is how you calculate the take profit for a sell bias or sell entry. Now let's move on. For the stop loss in a sell entry, right? We are still selling. So the price comes in, you want to sell from here, that means your stop loss will be above. So what you do now to set your stop loss is, now you are risking 30 pips. So 30 by 0.1 equal to 3. So what we do is that we are going to add the 3 to the current market price right here to get the stop loss above. This is basically how we calculate pips on gold. Very, very, very easy. And I believe I've been able to explain to you in simple terms. I took my time to work with you by writing and showing how it is calculated. All right. So let's go back to the real chart. All right. Let's go back to the real chart to see or apply over here. Let me change how the trade is going on this. All right. I believe you are still in profit. All right. Our goal is to hit this point. So we have some more hours to gold. Now let's go to gold. We are going to take a random trade at this point. All right. Then let's assume that this is just analysis just to teach you this. All right. Not really a big one. So let's assume we want to buy, all right, at this current market price. Now, what's the current market price? And gold, you have to know that gold moves very fast. That's why we call it a volatile pair. So by the time you realize the price has moved many times. All right. So let's see. Let's assume the current market price is, let's take this in 4036.90. Let's just assume that is it. Let me use this particular tool here. Let me use this tool. Now, current price, right? Current price is 4037.80. All right, so that's the current market price. Let me use a black. Yeah, okay. All right, so now because you want to buy, and let's say we want to have a take profit, all right, our TP is what? 60 pips. All right, and our stop loss is, let's say, 30 pips. That means you are going 1:2. That's the risk to reward ratio. R/R is what? Definitely 1:2. It means you are risking $1 to make $2. Are you getting that? So this is the conditions of this particular trade you want to enter, assuming. All right, now to set the take profit now will be what? To get the take profit, all right, it's just going to be the 60 pips, all right, multiplied by 0.1, which is going to give us 6, which is what the TP. Do you see it? Then the stop loss is 30 pips, so it will be 30 pips multiplied by 0.1, which is to give us what? 3, which will now be our stop loss. All right, so this is basically what we are going to use. Are you using that? Now let's look at the TP. How do we set? Let's set the stop loss first, which is the first important thing. So that means our current stop loss is what? 3. All right, so what we are going to do is that current price of 4037, all right, 4037, all right, 4037.80, because we are going long, our stop loss needs to be below. Our stop loss is going to be below the current market price because you are going long. All right, so now we are going to subtract that 3, all right, the stop loss from the current market price we saw, 4037.80. All right, let me make it change the color to something like this. All right, yeah, so we are going to subtract this from this. So if you have your trusty calculator, let's go. Let's just subtract from that. Very simple. So 4037.80 minus 3, which gives us 4034. All right, how do we get 4034.80? all right, which will be the stop loss. So what we do now is that our stop loss is going to be 4034.80, all right. It's just here because our entry, the current market price we used was somewhere above this point. It was somewhere here. You see, it was somewhere here. Are you getting that? Yeah. And you have to know that on gold, 30 pips is a small amount of pip, but you don't have to blow your account. It's normal. All right. If the price reverses against you, you take it. That's it. So that will be where our stop loss is going to be. Now, because the stop loss, let me bring it somewhere down. Let me change the color of the stop loss to red. Yeah, so that people know it's a stop loss. All right, so that's basically how we calculate our stop loss. Then when they take profit, because you are going long, the take profit will be above. All right, will be above the current market price. So this is how you are going to do it. The take profit of 60 which gives us 6. So what you are going to do is to add, all right, so we have 4037.80. Then we would add the 6 to the current market price to have 4037.80 plus 6, which will now give us 4043.80. all right, so that will be our take profit. All right, 4043. Let me use this 4043. Let me just try and 4043.80. very close. All right, then let me change the color to green to indicate this is a stop take profit. All right, so this is basically how it looks like. So if you notice, if you're entering from this point, then our take profit is above. All right, then our stop loss is below. That's basically how it is calculated on the chart. Very, very simple. All right, and if you're looking for a sell, assuming this is your button and you expect the price, all right, you expect the price to move all the way up and form something like a shooting star or bearish engulfing can do to short. All right, that means your take profit will be below. All right, you expect the price to move down. All right, and your stop loss will be somewhere above at this point. All right, so basically that's the same thing you do. You just have to keep in mind 0.1 is the value for 1 pip times the number of pips you are willing to risk or gain by using that. So that's basically how we calculate the pips on gold. And I believe I've made it very, very simple for you. From now on, I don't think you'll be having issues with how to calculate the pips on gold. All right, if this video helped you, kindly leave a comment in the comment section. Share this video to many colleague traders who want to understand how to calculate the pips on gold. All right, and subscribe to this particular channel for more important videos like this. In the next 2 videos, I'll be showing you how to calculate pips on Euro USD, GBP USD, AUD USD, and any other currency with USD as the quote currency. And the next 2 videos, I'll also show you how to calculate the pips on GBP JPY, AUD JPY, Euro JPY, USD JPY. All right, so yes, stay tuned for more insightful content as this, and I'll see you in the next video. Bye bye.